Hello, everyone, and welcome again to another edition of Honeycomb Digital Investments, the Regulatory Buzz. My name is Baxter Hines. I'm the Chief Investment Officer here at Honeycomb Digital, and I'm honored to be accompanied by Carol Goforth of the University of Arkansas. Welcome, Carol.
Thank you. Lovely to be here.
Glad to have you as well. Today is June 21st. We're well into the summertime, and the temperature of crypto news is really at a boiling point, so to speak. We've got a lot of things going on, and one of the things we wanted to talk about today is what's going on with the Celsius network. This is a group that has promised a lot of retail investors and probably some institutions interest payments on their crypto. I don't know if I should use the word deposit, but if you give them your crypto, they will give you some kind of return for it. Well, in the last few days, the Celsius network, under all of this stress, they put out a notification on their website saying that they would freeze all withdrawals, all transfers, and really any activity that these consumers could do, leading people to speculate that there had been a bank run at Celsius, and Celsius was in a position where it could not pay these depositors. So that's created a lot of additional panic in the market, and just wanted to talk about some of the stuff that we're seeing. So Carol, maybe if you want to just talk a little bit about how you're viewing this set of incidents from your perspective.
Sure. I think you're absolutely right. The crypto temperature matches the temperature outside, high and uncomfortable. And I think I started getting calls from folks. Do you want to talk? Do you want to give an interview? Do you want to give your insight about why Celsius has shut down? And that was on about June 12th, when Celsius posted that it was halting withdrawals and transfers. And at that time, I didn't have time to give interviews, but my initial reaction was Celsius probably was responding to oh my gosh, I need to get out of the crypto market because the entire market is declining. At that point, we've had a decline in the overall market capitalization of major crypto assets like Bitcoin, which for the first time since early 2020 was down under 20,000 per coin. And overall market capitalization down to around 1 trillion from a high of 3 trillion. So you were seeing crypto crash, and that was probably putting pressure on any number of platforms and trading groups. And Celsius also has the problem of being very active in the lending space, offering depositors a return, a yield on amounts that were deposited with it. And several other players in that space, notably Coinbase and BlockFi, had recently been the subject of enforcement actions by the SEC. You'd seen a number of state regulators saying that they were also going to initiate state securities claims against Celsius. So I think you had sort of a confluence of events. You had the downward pressure in the markets, you had regulatory pressures and presence and rumors, and then you probably had folks who were big players in the space saying, this would be a good time for a short sale. I can beat the market by promising that I will sell at this price at some point in the future because I'm just absolutely certain that the price is going to go down. And all of that creates pressure, downward pressure on the company itself to actually be able to meet those demands when they come up. So you have this downward pressure, you have demands, you have uncertainty, and then you have Celsius putting out the notice, we're going to stop. What I found really interesting is not the hold, not the stop order on the trade, but if you look at the last 24 hours from the date we are recording this, which is the 21st, you've got Celsius and its native token Cell up 60%. The crypto market is not up 60%. It's not up 12%. I mean, this is a remarkable recovery. What's going on? Why? is this happening? And it brought to mind sort of the dynamics that happened in the GameStop trading that my law students were also fascinated with, which is where the small players were tired of folks short selling, saying, oh, I know this company's going to go down, so I'm going to bet that it's going to go down. And I don't want to lose my money just because the big players have got together. And one little bitty player can't do anything, but a whole bunch of little bitty players acting together in concert can. And so they began buying and pushing the market price up. And I think you've got a bunch of the smaller players in Celsius markets buying and pushing the market price of sell up in an effort to force those folks who were engaged in the short sales to have to cover those positions. And that should alleviate some of the major concern and perhaps create a resolution to some of the extreme pressure that Celsius is currently facing. I think the big lesson here is, man, this is an incredibly complex space. This is not a place where if I was a small, unsophisticated investor, which even though I spend a lot of time researching and trying to understand crypto, I would not be putting my money without the advice of very sophisticated advisors on any of these platforms right now, simply because if you read through a lot of the offering documents, the white papers, they are opaque. They really don't give you the necessary information to understand the operating history and the structure and the plans and the business model. And when you do your research and you look at that and you can't figure out, well, why do you need the cell token? Wait a minute. Why are you going into crypto mining? Wait a minute. How are you possibly covering 18% adjusted return? Where's that coming from? How can you guarantee this? If you can't answer those questions, you need to be really, really hesitant. And I will tell folks if they ask, one, I'm not an investment advisor. Two, I'm not an economist, but I know enough to say you shouldn't be playing in these crypto markets with anything more than you can afford to lose, because it is risky. Yes, there is the potential for high rates of return, but for most people who have that, rags to riches story, I'm always concerned that there are other folks with the riches to rags story. And I hate the stories where folks have lost more than they can legitimately afford to lose because something looked too good to pass up.
I agree with you, Carol, and I think that you can't just rely on the word of the management behind the project that everything is going great. You mentioned the parallels with GameStop and with I think AMC, the other two stocks at the time that had a similar type of
Dynamic.
Similar dynamics. And another one that happened around that time was Hertz, the rental car company. When it went bankrupt, it was literally going through a bankruptcy proceeding and had declared bankruptcy. I think the court had even signed off on the bankruptcy. And the management team was encouraging investors to dump more money into the project. And when you look at something like Celsius, I don't know what their fate will be. If you had to ask me, I would, like you, I'd say that probably stay away. It doesn't seem good to me. But you watch the management at Celsius, and they just continue to say things are good. We're just going through temporary times. But they won't show you any hard facts about
it might be true. The reality is what they are saying could be true. I just don't have enough information to verify that.
And I don't think anyone does other than the management team at this point. And that's why I think your advice is exactly right. You've got to beware what's going on. We put out here at Honeycomb a video back in, I think, September of last year. It was called Interest on Cryptos, Caveat Emptor, the old Latin saying, buyer beware. And we talked about how BlockFi, Celsius, their lending practices where they were taking the money from the depositors and then going out and creating projects, it was just getting too risky for my taste, and the levels of disclosure weren't there. And so, although this seems like a very sudden downfall of something like Celsius, or a fall from grace, if you will, the dynamics were there for a long time for something like this to happen. And it really just took a major downturn in the crypto markets for this to unfold. Warren Buffett has a famous saying that nobody knows who's swimming naked until the tide goes out. And this is exactly what's happened. The tide has gone out. Crypto prices have gone out. There's nothing anyone can do about it. But the people who are not in the right type of position, the world is seeing just what they're made of.
Yeah, if you are a believer in capitalism, the markets are going to take care of this. If Celsius is not legitimate, it is not going to make it. And on one hand, I am very comfortable with that dynamic. I do feel for the folks who did not understand what they were getting into and did not listen to the advice of don't invest more than you can afford to lose. Advice that I know is out there because of the fear of missing out, and the opportunity looked so good. You know, you earn less than 1% if you put your money into a legacy financial institution. You know, even certificates of deposit don't give you anything back, not enough to make up inflation. And here's Celsius promising up to 18% adjusted yield. This, if it sounds too good to be true, it quite possibly is.
Right, that's right. And it's all kind of coming to a head right now. So we'll have to see. I think this is going to get a lot of people in Washington, and we've talked about how state regulators are already looking at this. There are going to be a lot of eyes from a legal standpoint examining what do we do and how do we protect retail and other investors from having
We're going to see.
Going
Right.
forward.
We're going to see lawsuits. I mean, we've just seen some more private lawsuits filed against Terra for the way that business was operated. I expect we'll see lawsuits directed against Celsius, even if the business looks like it's going to come out. The fact that folks had their assets frozen in the way that it has been, that is going to lead. That's going to lead to litigation.
Yeah. And from a historical perspective, this similar kind of stuff happened after the internet had its first real run in the late 1990s. You started to see lawsuits against companies like WorldCom and Enron and Global Crossings and all these different fraudulent or bad practice types of organizations. They got brought to light, and the internet continued to grow, but it was a very negative chapter that a lot of people got hurt by, and I think crypto is going through that same type of phase right now.
I agree.
So let's keep our eyes on what's going on, and we'll be back at another time for another episode of the Regulatory Buzz. I thank you very much, Carol, for being here today.
My pleasure.
See you next time.
Bye-bye.